All right, Rocketella Nation, RT here. And if you are just tuning in, welcome. Welcome to the place where we do not just talk about macro, fundamentals, ratio charts, and market cycles. We decode them. We break them down. All right, we strip away the Wall Street performance art, the polished nonsense, the recycled headlines, the fake drama, and we get straight to the real story. No smoke, no costume, no pretending noise is insight. Just the clean signal underneath all the chaos. Okay, that is what we do here. And today, all right. We need to talk about one of the biggest supply shocks hiding in plain sight. Uranium. Yeah, uranium. Not flashy, not trendy, not exactly the thing most people bring up at dinner parties, unless your dinner parties are extremely weird. But quietly, underneath the surface, this market is turning into something seriously explosive. And okay, here is why. What we are looking at is not some tiny imbalance, not some cute little temporary squeeze, not some one-quarter blip the market can just shrug off and forget. No. This is a structural deficit, a real one. Demand is climbing, supply is limping, and the gap ahead looks massive. Really, really massive. So if this market were a movie, this is the scene where the music changes, the room gets quiet, people start looking around, and everybody suddenly realizes the problem is a lot bigger than they thought. Because once a market built on essential supply starts falling behind essential demand, all right, things can move fast, very fast. And uranium might be one of those markets where the story stays ignored right up until the moment it absolutely cannot be ignored anymore. Now here is where the story gets really, really interesting because nuclear is making a comeback, a real comeback. All right, so remember when people used to act like nuclear was old-fashioned, too complicated, too unpopular, basically yesterday's energy source? Yeah, funny how reality works. Okay, because when energy security starts mattering, when grids need reliable baseload power, when countries realize solar and wind cannot carry the whole load at 3 a.m. on a windless night, suddenly nuclear starts looking very, very attractive. Not perfect, but attractive. Necessary even. And that is the shift. Reactors are getting restarted, new projects are being discussed, governments are rethinking old assumptions, and policymakers are starting to sound a whole lot less ideological and a whole lot more practical. Amazing what happens when the lights actually need to stay on, right? Energy security has become strategic, all right, and nuclear has moved from neglected to necessary. That is not some tiny narrative change. That is a full-blown policy pivot. And once that happens, uranium stops being just another commodity. It stops being this sleepy little niche thing people ignore. No. It starts becoming the fuel behind a major infrastructure and policy reset. So this is not just about atoms and reactors and technical jargon. This is about governments, grids, capital, and reality all snapping back into the same room at the same time. And when that happens, demand for uranium stops looking optional and starts looking structural, durable, sticky, the kind of demand that can hang around a lot longer than the market expects. All right. And that is when this whole story starts getting very serious. But here is the catch, and this is where the market starts coughing up the truth. You cannot just summon new uranium supply overnight. No chance. This is not food delivery. This is not software. This is not some app where you tap a button and a mine shows up next week. All right? That is not how the real world works. Uranium projects take years to permit, finance, build, and finally bring into production. Sometimes a lot more than people expect. sometimes more than a decade. And that timeline, okay, that timeline is everything. Because while demand is accelerating, supply is basically stuck in traffic with the handbrake on. Slow, slow, painfully slow. And that lag matters a lot. Because commodity bull markets are usually born the moment the market realizes new supply cannot respond fast enough. Not later, right there in that realization. All right, so this is when the narrative starts changing. What looked manageable suddenly looks tight. What looked temporary starts looking structural. And what looked boring starts looking explosive. That is the exact setup uranium has right now. Demand moving forward, supply barely moving at all, and the whole market slowly waking up to the fact that this gap cannot be fixed with a press release or a PowerPoint deck. You need time, capital, permits, infrastructure, political support, the whole chain. And until that chain catches up, okay, the squeeze stays alive. So, all right, this is not just a story about uranium. It is a story about a market where reality moves slower than demand. And when that happens, prices usually do the job of forcing everybody to pay attention. All right, so let me stop here for a second. Okay. Because if you are exhausted by market commentary that sounds polished, important, and intelligent, but somehow leaves you with absolutely nothing you can actually use, then Rocketteller.com is probably for you. All right, over here, we take macro, fundamentals, ratio charts, and market cycles, and we make them clear instead of confusing. No Wall Street performance, no recycled takes dressed up as discovery, no fancy language trying to hide the fact there is no real point. Just sharp charts, clean logic, and the real story behind gold, commodities, stocks, and where money is actually heading. Because markets are not just random motion, not most of the time. Usually there is a reason, a setup, a chain of cause and effect underneath the move. Okay, so there is a bigger trend under the surface, and once you learn how to read it, the whole market starts looking different. A lot different. That is the edge, all right? Not more noise, more clarity. Not more shouting, more signal. So if you want less noise and more real macro insight, follow our work, subscribe to the YouTube channel, and visit Rocketteller.com for the newsletter. Rocketteller.com. Again, all right? Rocketteller.com. Same name, same mission. Clearer signal, less nonsense, more real perspective. And if that sounds like your lane, okay, you already know where to go. So who wins in this kind of market? Okay, simple. The people with actual pounds in the ground, real pounds, real supply, producers, near-term developers, and companies with genuine expansion potential in jurisdictions investors can actually trust. That is where the leverage sits, all right? In a tightening market, the guy holding the goods becomes king, not the guy with the pretty story, not the guy with the fancy slide deck, the guy with the material, the real material. That is who the market starts caring about when things get tight. And the losers? Okay, so the losers are the ones forced to chase supply later, after the market has already repriced, and everybody suddenly realizes the game changed. Utilities that waited too long. Consumers assuming cheap baseload power would always be there. Investors still treating uranium like some forgotten little corner of the commodity universe. Yeah, that works right up until it really does not. Because this is where shortages stop being theory and start becoming leverage. Leverage for the people who saw it early, who understood the setup, and who got positioned before the crowd woke up. All right. Once the market figures out supply is tighter than expected and demand is stickier than expected, the advantage shifts fast, very fast. And in markets like this, okay, Being early is not just nice, it is everything. That is when boring assets stop looking boring, forgotten names stop looking forgotten, and the people holding real pounds in the ground suddenly look a whole lot smarter than everybody who laughed too soon. And that brings us to the bottom line. So this chart is pointing to a 215 million pound deficit by 2045. Let that sink in for a second. That is not a rounding error, not background noise, not some tiny mismatch the market can casually wave away. No. That is a giant hole forming right in the backbone of the future energy grid. All right, that is a serious gap, the kind of gap that does not stay invisible forever. So, the uranium story here is not about some temporary spike. It is about a structural shift, a real one. Demand is building, supply is struggling, and the market is slowly waking up to the fact that this problem is a lot bigger than it looks at first glance. And that is usually how these things go, right? The smart money starts moving before the crowd even realizes there is a door. Because once the market fully prices a supply problem like this, it usually moves a whole lot faster than most people expect. Faster. That is when sleepy markets stop looking sleepy and start looking explosive. All right, guys, that is it for today. Hopefully this gave you a clearer picture of what is really happening in the market and where things could be heading next. If you enjoy this kind of macro and fundamental breakdown, make sure to follow our work and subscribe to the YouTube channel. And for the newsletter, visit rockteller.com. Again, rockteller.com. So, stay sharp, stay curious, stay fast on your feet, because markets do not wait for everybody to catch up. I will see you in the next one.